All right, welcome back, everyone. Ready for another deep dive?
Always.
Today, we're getting into something I bet you're pretty familiar with. Something you probably use every day. We're talking Procter and Gamble Hygiene and Healthcare Ltd.
The stuff you find in your bathroom, basically.
Exactly. And we're going to break down their second quarter results for fiscal year 2025.
Hot off the press.
We've got all the official company documents right here, plus some of the questions they prepped for their press release, so we're getting the full picture. And let me tell you, there's one thing that really jumps out.
Their profits.
Yeah, way, way up compared to this time last year. Let's see if we can figure out what's driving that.
Well, first things first, right? Got to look at those numbers.
Okay, so before we get into the why, lay it on us. What are the key figures from their report?
All right, so revenue clocked in at a very healthy over 113,516 lakhs,
Okay.
which is a pretty significant jump from the same quarter last year. Back then, it was 93,175 lakhs.
Big difference.
But yeah, like you said, it's the profit that's really eye-catching. This quarter, they pulled in a profit of 21,190 lakhs.
Wow.
Now, compare that to last year during the same period. They only made 8,106 lakhs.
More than doubled. That's insane. Before we go any further, though, we should probably add the little disclaimer that these are unaudited figures.
Right, good point.
Just so everyone's aware, the final numbers could change slightly once they're fully audited.
Absolutely. Always good to keep that in mind. But, I mean, even with that in mind, the overall trend is pretty clear.
Yeah. And for anyone who wants to really get into the nitty-gritty, the full financial statements are all there in the source material.
Go check them out if you're curious.
Now, there are a few things that really jumped out at me when I was going through this report. For example, changes in inventories. Last year, it was negative, but this year, it's positive. What's that all about? What does that tell us about how they're managing their stock?
Interesting observation. That kind of swing usually means there's been a pretty deliberate shift in strategy. When you see a negative change in inventory, it can often mean a company overproduced, right?
Right. Made too much stuff.
But then when it swings positive like this, it could mean they're actually anticipating higher demand. It's possible P&G saw this coming and they're, ramping up production.
So they're getting ahead of the game.
Could be. Maybe a new product is about to drop, or maybe they're gearing up for a big marketing push.
Interesting. Makes you wonder what they've got up their sleeve. And there was something else. Let me see. Yes. Prior year tax adjustments. Looks like there was some kind of situation last year that resulted in a pretty big tax bill. Something about an advanced pricing agreement.
Ah, yes. So, to put it simply, that kind of agreement allows multinational companies like P&G to work with tax authorities to figure out how they'll calculate tax on transactions that happen between their different branches.
Okay, so they're basically getting everything pre-approved.
Exactly. It helps prevent disagreements down the line and make sure everything's, above board. But for P&G, this particular agreement actually led to them having to reassess some past transactions.
Oh, no.
And they ended up owing a bunch more in taxes, 1,656 lakhs plus interest.
Ouch. So they were trying to be proactive, get everything squared away, but it ended up costing them. This actually brings up a really important point for everyone listening. When we're comparing performance year over year, sometimes these one-time events can really distort the picture. It's easy to forget that last year's profits took a hit from that unexpected tax bill.
Absolutely. It's crucial to consider those outliers. And there's actually another example of that in the report. Did you catch the impairment losses from last year?
Yeah, I saw that. 1,303 lakhs. What was that all about?
That was all because they had to terminate a contract with a manufacturer.
Right.
It wasn't that their core business suddenly went south. It was just this one specific event that caused that temporary dip in profits.
So it's like a blip on the radar.
Exactly. And this year's numbers look even more impressive when you consider that, last year's figures were dragged down by that one-time loss.
Okay, so we've got the raw numbers from the report, but I want to start connecting some dots.
Let's do it.
And luckily, we've got these press release questions to help guide us. One of them asks about P&G's strategy for driving revenue growth. Obviously, they had a huge jump in revenue this quarter, but what's fueling that?
Well, the financials themselves don't tell the whole story, but they definitely give us some clues.
Like a treasure map.
Exactly. Remember that inventory adjustment we were talking about? That proactive move suggests they're not just reacting to the market, they're thinking ahead.
Anticipating what's coming next.
Exactly. Maybe they've rolled out some new products, or they're expanding into new markets, or they're about to unleash a huge marketing campaign.
Exciting. And what about cost management? They've clearly seen a huge jump in profits, so did they get really good at tightening their belts, or is something else going on?
Cost management is definitely part of the equation, no doubt about it.
Right.
But it's also important to remember those big one-time hits from last year,
Mm,
that tax adjustment and the impairment loss, those really dragged their profit down.
they did.
So while they may have improved on controlling their costs, I think it's probably a combination of things that's driving this surge in profit.
Yeah.
Increased revenue, potentially lower costs, and of course, not having to deal with those big one-time expenses from last year.
So a perfect storm, in a good way. Okay, this is where it gets really interesting. One of these questions is about those external factors that have been giving businesses a real headache lately.
Oh yeah, the fun stuff.
Things like inflation and those pesky supply chain issues that we all know about. So the question is, how is P&G managing to do so well in spite of all that? Did they find some magic formula to dodge all the bullets?
That's what it looks like, right? But it's always tempting to think that. Whenever companies struggle, we blame it on the economy. But when they thrive, we assume they must have some secret sauce. The truth is, P&G's success is likely a mix of smart internal strategies and successfully navigating those external hurdles.
The best of both worlds.
Exactly. And don't forget about that inventory management shift we talked about. That suggests they're making internal changes to anticipate and even capitalize on potential market shifts.
So they're not just sailing with the current, they're actively charting a course. Now, another question that popped up is about the competitive landscape. Unfortunately, we don't have any data on their competitors in this particular deep dive,
Too bad.
but it really gets you thinking. Who are those main rivals in the hygiene and healthcare market? How are they dealing with those same economic challenges? It's a whole other deep dive waiting to happen.
I'd listen to that.
Me too. But for now, let's stick with P&G and see what else we can uncover.
Yeah, it really is a complex puzzle for sure. And we're starting to piece it together.
Exactly. And one piece of this puzzle that I want to look at a little closer is this advanced pricing agreement thing from last year.
Yeah.
You explained earlier what those agreements are in a general sense, but could you maybe unpack that a little more for our listeners? What exactly went down there, and why did it end up costing P&G so much in taxes?
It all comes down to the nitty-gritty of international taxation.
Oh, fun.
These advanced pricing agreements are supposed to make things simpler for multinationals like P&G.
Simpler than the tax code already is.
Relatively speaking.
Okay.
Basically, they allow companies to get pre-approval from tax authorities on how they price transactions that happen between their branches and subsidiaries, especially when those branches are in different countries.
I see. So it's about making sure they're not playing games with their profits, trying to avoid taxes by shifting money around to countries with lower tax rates.
That's exactly it. Governments want to make sure companies are playing fair and paying their fair share no matter where their profits are booked.
Makes sense. So these agreements are like getting a pre-approved blueprint for how they handle those internal money transfers?
Precisely. It prevents disputes and helps keep everyone on the same page. But for P&G, when they reached this agreement with the tax authorities in India, it triggered a review of some of their past transactions.
Uh-oh. I'm sensing this didn't end well.
Not really.
Yeah.
It turned out that they owed some additional taxes.
So they tried to do the right thing, get this agreement in place, and it backfired. Kind of a no good deed goes unpunished situation.
You could say that.
Yeah.
It just goes to show that even when you're following the rules, sometimes those rules can change and it can have a real impact on a company's bottom line.
It's like trying to hit a moving target. Okay, so we've talked about this advanced pricing agreement saga. Now I want to shift gears a bit and talk about P&G's position in the market.
Okay.
One of the press release questions asks specifically about their market share and their competitive advantages. Even without data on their rivals, can we get a feel for how P&G is staying on top just by looking at these financials?
I think we can. I mean, the fact that they're bringing so much revenue and their profit is so strong, that tells you they're a major force in the market.
They're killing it.
Right. Clearly, people love their products.
Which says something about their brand recognition and how well they market themselves.
Absolutely. They're doing something right. But, as we said before, it's important to understand the whole competitive landscape. P&G's not operating in a vacuum.
Right.
There are tons of other companies trying to grab those same consumer dollars.
So even though we don't have the data on those competitors in front of us right now, can we at least try to figure out who those big rivals might be? And how are they trying to, chip away at P&G's dominance? What strategies are they using?
It's like analyzing a chess game. To really understand why one player is making certain moves, you have to know what their opponent is doing.
What their next move might be.
Right. And even though we don't have all the pieces on the board, we can still speculate a little.
Hmm.
Think about their strengths and weaknesses. How are they adapting to the same market forces that P&G is dealing with?
That's a great point. And something our listeners can think about too. Maybe they have some insider knowledge about those competitors that we don't. Maybe they work in the industry or they're just, super passionate about consumer goods.
Yeah.
Who knows? Maybe they'll have some insights that can help explain things even better.
It's that constant curiosity. It's what makes these deep dives so interesting. There's always more to discover.
Totally agree. All right, we've covered a lot of ground already. I think it's time to take a quick break and then come back and tackle a few more of these press release questions. I have a feeling there are still some pretty interesting insights waiting to be revealed.
I think you're right.
Okay, so we're back. We'll have to get right back to those press release questions. There's one that I'm particularly curious about. It has to do with the future. Looking ahead, what's the outlook for the coming quarters? Based on these Q2 results, any hints about how P&G might perform in the coming months?
Well, predicting the future is always a little risky.
Mm-hmm.
Especially in a market like this, things are constantly changing.
Mm-hmm.
But if we use the data as clues, I think we can make some educated guesses.
Okay.
P&G's revenue growth has been strong. Their
Okay.
profitability has improved. And remember how we talked about their inventory management, that proactive approach. I think all of that points to continued success.
So we're on a roll?
It seems like it.
Yeah.
But of course, you never know what external factors might come into play, like inflation and supply chains. And, consumer preferences are always changing.
Yeah, those are wild cards for sure. Now, there's one question here that really makes you zoom out and look at the big picture. It asks, did these financial results reflect any of Procter & Gamble's sustainability initiatives? And if so, how are those playing with consumers?
It's interesting how sustainability has become this crucial part of business analysis.
Yeah.
It's everywhere now. And you're right. The financial statements themselves don't have a specific section for sustainability metrics. But that doesn't mean P&G isn't doing anything in that area.
Mhm.
In fact, more and more companies are trying to weave sustainability into their core operations.
Right. Right. It's not just a separate thing anymore.
Right. We're talking about cost management, supply chains, even product development. It's all connected.
So they're not just making a big announcement about it. They're actually trying to incorporate it into everything they do. But like you said earlier, consumer perception is a huge part of it. Are they doing a good job of getting the message out there? Are consumers actually aware of what they're doing?
Yeah, it's not enough to just be sustainable. You have to make sure people know you're sustainable.
Yeah.
That means being transparent, communicating effectively, even educating consumers about the steps they're taking. And it's tricky because this whole sustainability landscape is constantly evolving. So, it'll be interesting to see how P&G approaches this going forward. How do they keep up?
Definitely. Okay, so before we wrap things up, I want to go back to one question that we kind of touched on earlier, but we couldn't really answer fully. How does Procter & Gamble's performance in Q2 stack up against their biggest competitors? Obviously, we didn't have that competitor data for this deep dive, but it's a big piece of the puzzle, right?
Totally. Context is everything. I mean, maybe P&G's performance looks amazing because their competitors are struggling. Or, on the other hand, maybe their rivals are also doing really well, which would tell us that there are broader industry trends at play.
Right.
Without that data, it's kind of like looking at a single piece of a giant mosaic.
Yeah.
You can appreciate the details, but you're not seeing the whole picture.
True. I guess it's a good reminder that business analysis is a process, not a destination. There are always more questions to ask, more things to uncover, and often the most valuable insights come from recognizing what we don't know.
I think that's a great point. It's all about connecting the dots, questioning your assumptions, and never losing that curiosity. That's what makes this stuff so interesting.
Couldn't agree more. So, to everyone listening, as you're navigating this constant flow of information out there, remember to question everything. Don't take things at face value. Dig deeper, look for those missing pieces, and you'll be amazed at what you find. That's all the time we have for today, but until next time, keep exploring, keep questioning, and keep diving deep.